Hi, everyone. Happy Wednesday and Happy New Year. We are starting off the year talking a little bit about some optimistic uh, ideas, but also, of course, as always, if it's the business world, it comes with warnings and really just a lot of what we've observed, especially coming into January. So, why I said optimistic was that generally what we want to cover is how would a business survive a uptick. So again, that's really, really great. But unfortunately, it's only really great news if the company has all the systems in place for an uptick in whether it's going to be business or certain orders or certain needs and matters coming in, cases coming, really depending on whatever type of business it is, and everyone would be affected. And of course, some businesses that are more cyclical, that are more seasonal, already have established practices. So if you think of hospitality, some hospitality, or whether it's restaurants or bars and so on, may have outdoor seating. And so they're aware that come summertime or warm months, of course, you would need to stock up on more products. You need to make sure that you have more staff. But we're really looking at a lot of service-based businesses, manufacturing businesses, really any company that can at any time, whether it's going to be by increased marketing efforts or by just a better product coming onto the market, a better service, better than everybody else that's in that industry. And if you do experience that, what do you have to be prepared for? Um, on my end, of course, I'll always bring it back to employees. And one of the things that you want to make sure you look out for is if you have this sudden uptick and you have just a couple of months to hire, making sure that you still have all those practices established, that you're still hiring the correct candidates, but also make sure that you're accounting for those future expenses down the line. And I'm sure Jane will tell us a little bit more about that as well, but the quarterly accounting for the filings for employment taxes. Make sure that whatever that the wages that you're paying to the employee are, you're accounting for the fact that if you're adding another 15% to your workforce, that you understand that that's going to come with quite a steep tax increase there as well. But of course, that's always what I look for first, because I find that that's the team that you're going to build to put everything else into practice. So, Jane, tell me a little bit about, what do you look at first when you think of a business growing?
Thank you, and hi everyone. So some of the things that you mentioned, this comes as, forecasting and budgeting, but I think what I heard you also mentioning a lot is in my world, I would call it a cash flow. So that could be a cash flow issue because you have to, as you're increasing, like you mentioned, the payroll might be going up, and some people might not be taking that into consideration. So looking at that, and then also investing in some of the technological tools. Sometimes when you're looking at a price for a new POS system or even some of the accounting tools, it has, it's a couple $100 here and there for POS system. It could be a lot more. And some people are hesitant to invest in that, but I do think that if you are going with this increase, you should be investing into these tools as well because it is really important to have the data available. For example, if you have a DOL audit and somebody's requesting information and you don't have the records in place, it's kind of sporadic. It's going to be really hard to just give that information, let's say, to an accounting company or a bookkeeping company, or if your employment attorney, such as Irene, is looking at that and you're not having that information. So you're sort of delaying everything else as well, right? I mean, do you have that situation where you need some sort of records and your clients might not have it ready?
Absolutely. And then, the extensions are cause additional suspicion, whether it's going to be the DOL or whether it's going to be from, an opposing side or even from past employees who may just need some records come end of year. And then, we have seen that balloon definitely into problems. So just being prepared from every aspect. And I know that we say this every single week, having that paperwork together is so important, and being able to invest in the infrastructure where you can store all of that is also so important. So a lot of this will bring us back to budgeting, where we've talked about, well, what's important for the future? What's important for when you're planning for how many employees you're going to have, not just planning for the things that are the most obvious, like the necessary wages and the benefits, but also planning for, well, how will they all sign their new documents? Should there be a HR platform and an HR system that they should utilize? Because if you do that 10 years down the line and you account for turnover in a company that typically would have 100 employees, you're in the thousands now. So entering all that in afterwards or working with paper records is really tough. So I strongly recommend just making sure that as you're growing, a word that's always used is scaling, but it really is true that there's just different systems that are necessary for companies of different sizes. And what's very much maintainable for a company that may have 10 or 20 employees is just simply not going to be maintained, something that you can maintain on your own at 50.
Yes, I agree. And also in 2024, we're seeing a lot of changes, and we're actually going to be doing future podcasts on that. So we are going to be keeping you in the loop, but you do have to be ready for a lot of changes. And with that comes a lot of responsibilities for business owners. So stay tuned for future podcasts.
Thank you.